In today's interest rate markets, let's look at the 10-year note futures as they're recovering today. 10-year note futures coming off of 2 days of selling pressure to trade higher today. And with today's price action, we're looking at the futures market trading up and holding the highest levels since the middle of December. So we're looking at 1.5-month highs here today, currently priced at 109.08. Now that's in the middle of today's range. So we did actually see prices higher early in the session, but still holding on to a solid gain here and moving the price action up to the highest levels here in a month and a half. And driving factors today, number one, central bank activity. Bank of Canada yesterday cutting rates, ECB cutting rates today. So again, expected, but also I think the idea is that we continue to see most of the central banks across the globe, the bigger ones, continuing to cut rates. And so again, that shifts the sentiment, I believe, in the markets here. Couple that with the digestion of the Fed announcement yesterday, and it did appear that if we continue to see some moderation in inflation as well as a little bit of loosening in the labor markets, that the Fed is still poised to potentially cut a couple of times this year. So I think, again, a sentiment shift coming out of that Fed announcement. The third thing would be the data points this morning. GDP revised lower. We did see some price components in there pretty much in line with expectations. Now, tomorrow will be the PCE data, much followed data points for inflation by the Fed as well as the market. So that's certainly, I think, going to have an influence on the markets tomorrow as how that unfolds and gets priced into the market. But for today, we're seeing some nice buying pressure pretty much across the entire curve. Yields, 10-year yield down 4 basis points today to 451 basis points, so moving back down towards the low end of the range for the last month and a half. As well as the entire curve is moving lower today. We're seeing buying pressure from the ones all the way out to the 30s, moving yields lower by 2 to 4 or 5 basis points, depending on where they are in the curve. But when you look at that 10-year, we're looking at the price action now moving up to the highest level in the last 6 weeks or so, and yields moving down to the lowest level since the middle of December.